All right, so in this video, we're going to be talking about why market structure shifts fail. I see this is a big issue with so many traders, and it's a big complaint. Like now I'm starting to see more and more people say, well, market structure just doesn't work, right? It just doesn't work. And especially with, when I see people talking about like, ICT 2022, because, they're looking for these lower time frame shifts. But then, repeatedly, they're just getting stopped out over and over and over and over and over again. And they're like, this stuff just doesn't work. It works. You just don't have an understanding. You don't know what you're doing. Okay. What you need to understand and where you guys are going wrong is because you don't understand where the draw is. The liquidity is what gives it validity. I always say that. I know the liquidity is what gives it validity. You need a draw. You need a magnet for price to give that push. So this is a really good example of this. NASDAQ. Me and my mentees, we were talking about this this morning, right? So it ends up coming down here, and this thing takes out this higher time frame sell side. It's taking out a huge bucket of liquidity right here. Huge bucket of liquidity on this push lower right here. And then we see this displacement higher. Look, you see that short-term high right there? You get a strong close above that. You get that fair value gap. That's a confirmed bullish shift in market structure to the upside on NASDAQ. You see that right there? Excuse me. So as I was saying, look for this thing to come up into this imbalance up above right here. Okay. And it pushed up into that imbalance. It did give the push up that I was anticipating. But what happened next is it pulls back. You know what a lot of people would do? They're going to look to buy in here. But I made very clear, it is no longer valid. It is no longer valid on that pullback because it has seeked that liquidity in a premium. This is the problem. A lot of you have no clue where your draw is. You're going in and you're looking for any old little shift that you see on the chart and say, oh, there it is. Let's enter a discount. Let's just take it up. You got to have a full picture. You got to have a full picture of liquidity, the market structure. And that's how you're going to be able to operate effectively. Okay. It's just people aren't doing that work. And then they'll go and say, oh, market structure shift, they don't work. It works. You just don't know what you're doing. That's as simple as that. You don't know what the fuck you're doing. And then when you don't know what you're doing, yeah, of course you're going to get stopped out repeatedly, right? So the thing is with this NASDAQ, you go to the 15-minute chart here. This is what I'm talking about. We had noted this 15-minute imbalance right there beforehand. You see this? And we have this displacement range. Now I figured we were anticipating that this thing was going to have a push up, clean out these highs here later. Keyword there, later. But the thing is right now, like this thing, it's come up to a short-term premium. You take your Fibonacci from that high to that low. I want you to look at this because this is where we got that push up on that lower time frame. Now it's just displayed on a 15-minute. This thing ends up pushing up right here into a premium. Expensive marketplace. Into a imbalance in a expensive marketplace. That draw has been seeked. It's moved up into an expensive marketplace now. So what can it do now at this point? Since it's moved up into an expensive area, it's going to want to seek the opposing sell side now. That's why you don't trust that push up or the pullback within that range now, because it's already moved up into an expensive area. Same deal if it's taking out like 15-minute buy side. It has sufficient liquidity. And then that's the issue is traders will then look for that next pullback, but the move's already finished. It's already done. It's already done. And that's the thing. Sometimes if you're waiting for that pullback into a discount, you're going to miss some plays. If you don't want to go off a candle close and just enter on a candle close and mark it in, you're going to miss some plays. Or sometimes you're not going to get that pullback. And then this pullback, as I was saying, it's no longer a valid play at that point because it's already came up into an expensive marketplace within that dealing range, into that imbalance. Okay, so it's not going to respect that range as much anymore because it's expensive. It moved into expense. It wants to seek the opposing sell side now. So essentially what that does right there is it creates liquidity. It's still going to want to have that reversal as we were anticipating, but now it's come to a premium, that imbalance. It creates liquidity down here. So it seeks that next, that liquidity that it just created right there, aka the stops of the people who say, oh, this doesn't work, right? Because you don't understand where the draw is. And then it takes care of that, has the next displacement higher, and then it ends up seeking it because it has more liquidity to work with now. Now, this is a good example of, a good setup. So we talked about this in Mike or in the chat as well. Like we had this 5-minute shift right here. We had this strong push right here. This is after it took out a higher time frame sell side within this range. We took out this higher time frame sell side right here. And then we got this 5-minute shift. We got that strong close with the short-term high. We got that fair value gap confirmation in there. And that was valid. And the key reason why it's valid is because it's still in a cheap marketplace and it has a very clear drop above being that imbalance, which is what we were anticipating it was going to draw up into. Okay, it wasn't like over here where it's come up into an expensive marketplace, into an imbalance, a big 15-minute imbalance. No, like this is still cheap and it just recently took out higher time frame sell side. So think of it like in simplest terms, it has enough fuel to make the trip up into that next draw. It draws up into that, and then as I was saying, once it comes into this area, you want to be careful. You want to be careful because now it's expensive, it's got resistance there, and it could fold. And that's exactly what happened. It folds. It comes down to understanding where the draw is. That's going to be, most of the work in regards to the technicals. All right. You need to understand market structure, liquidity, all that stuff. But where a lot of you are going wrong is you just do not understand the draw, and you're looking for these pullbacks within these ranges and you get stopped out repeatedly because the draw has already been taken. The next key draw has already been taken. So then that's why you're getting stopped out repeatedly. You got to understand that. Okay. So hopefully this video helps you a bit. If it did, leave a like, subscribe, and I will see you later.